Good evening, everybody. A little bit late. I'm having some technical troubles. Finally got it up and running. All right. Nothing difficult on our trend analysis. You can see how the Dow actually used the T-line. It was still staying above the T-line in the Dow, and the NASDAQ, just nice, strong, steady uptrend, which makes this, even though the Dow closed down 100, the NASDAQ closed up 71, still telling us the trend is in progress. Crude oil kind of hovering in here back at the 24.35 area. See what some of the others have done. I checked them earlier. Gold right now is just moving sideways, not anything spectacular there. And I don't even know getting all the wrong. You can see what's happening in cattle. There's the fry pan bottom. There's the breakout. There's going to be the J-hook pullback to the T-line or the 50. So you watch that setup. And hogs drifting off. Trying to think of what else there is to look at. Wheat. Not anything spectacular on that chart. And soybeans, still stuck in here below the 50. So nothing on that front. So let's take a look at some of the charts. I was going to demonstrate or kind of narrow down which sectors are acting the strongest. But the first 5, 6, 7 sectors are all medical, supply, diagnostic substances, everything related to medical and biotech. So we got a good long list of them. But let's take a look at the ones we're involved with. We recommended this one, Viacom, because of this kind of a movement right here, kind of a bullish flutter kicker. I would suspect they're coming up here and then have the possibility. Did I lose the 200-day moving average? I don't think I did. No, it's there. So Viacom is still a good trade setup. Again, with the expectation of coming up to the top of the trend and then possibly breaking out further from there. Saba has just been working nicely. And notice the one major element of all this, that they could never close it below the T-line. And here's one of the things that we're going to show as a observation that will make you a lot of money, is if you see a flat trading with a doji at the end, watch to see what happens after that doji, because you've got indecisive trading and then the ultimate indecisive trading day, the doji. That usually means things are loading up for the next price move. This one, make this a little bit smaller. I use this one in the, look at your fry pan bottom breakout, fry pan bottom breakout, fry pan bottom, likely in another breakout situation. And what does this kind of infer? That this is a nice strong uptrend, But during the uptrend, there's good profit taking, then the next move, good profit taking, then the next move. So it's not like there's exuberant buying. It's still a nice steady uptrend because the profit taking is occurring along the way. This one's been working out for us, EBS, ever since it did another J-hook pattern and starting back up. Slow is, if it's not slow, try whole, Vic. And it really doesn't need a full stochastics. DKNG, still moving up ever since its classic fry pan bottom J-hook pattern. Now this is where we illustrated where last week, or I guess a couple weeks ago, we bought the 20 and sold the 2250s. I can't remember what it was. What was it, like 55 cents? With the idea that if it got up above 2250, your 55 cents would go to 250. Well, today it's still trading at 190 because that's the difference, or that's the enthusiasm in the 2250s still moving up or have a bigger premium on it than the 20s, because 20s are obvious now in the money, where the 2250s are closer to being at the money. So what do you do with that situation? Well, for it to go from 195 to 250, all you have to do is just ride this out for a couple more days till expiration on Friday, because on Friday there's no more premium left in either one, and that means it should be pretty close to the 250. So as long as it stays up above the 2250, the spread will start widening to get to that $2.50 level. But this one was a good chart because we could see the fry pan bottom J-hook pattern. These are the type of things that all you have to do is learn 4 good patterns, and you'll be consistently in the right direction with a high degree of probability. Or you could put in a sell at 250, yes, but what happens when you come out of a spread? When you put on a spread, it doesn't execute immediately. They have to, wherever it went to, the trade desk, they have to work on it a little bit to make sure that the price of one option and the difference between the next option gets to that level. So at any given time, yeah, you could put it in at 250. But what might happen is, let's say it starts flattening out and rolling over for the next couple of days. Well, for $2.20, maybe you say, all right, let's close it out at 220 because it's not worth the risk holding it for another couple of days, and it might come all the way down here and you lose a lot of your profit. So at some point, if it's trading at 220 and you've got, so let's see, 3 days left to go, you have to decide, is it better to have something that is now worth 220 to make another 30 cents? Or am I better off taking the 220, taking that money and go find something that has much bigger upside potential? Okay, so what are we looking at? GNK. So here's another one where we own the calls coming off of this J-hook pattern, and the calls, or today the price was right about where it topped out before, in the overbought area. So we went ahead and took profits, because look how far away you were starting to move from the T-line, and you were right here at this level. What's the worst case scenario? You take profits and then you go find something that looks more like this or more like this. Bill, when is your expiration on your 2250? Who would buy a spread for $2.50? There is no profit. When you get to it's not that you're buying, somebody's buying a spread from you. Which one was this on? On this, let's say 3 days from now, the maximum of this spread, the 2250, is going to be the difference between selling or buying this one back because you sold this one and buying this one. So let's say hypothetically it's up here at 25. Well, you're putting in an order to close your spread, which means you want to sell the 20 and you want to buy back the 20 or the 2250s. So it's not the price of the spread, it's the price of what would be the difference between those two prices. So you're not selling a spread to somebody. You created the spread, which was buying the 20s and selling the 2250s. So now when it's up here and it's the difference between these two prices are almost 250, you're buying back the 2250s and you're selling your 20s. I think we must have done it down in here, or maybe right on this day at the doji sandwich J-hook pattern setting up. And the two legs go to different buyers and sellers. Yes. Yeah, you're not selling a spread to somebody. You're just closing out the two positions that you put on to create that spread. Okay. Matador, one of the oil stocks, it's just starting the next move up. So if this is kind of a wave one, feasible to get up here to the 200-day moving average. So the reason we put on the spread, let me go backwards there a little bit. Hypothetically, let's say on this day, you might be able to buy the 20s for, I'm just picking out a figure, $1.50. Well, that meant to make any money, the stock was going to have to close above 21.50, had to move up here. But so if it moved to, let's say you bought, what did I just say, the 20s, so it moved to 22.50, kind of where we would anticipate testing that level. Well, if you paid $1.50 for the 20s and it went to 22.50, all right, you made $1 on your $1.50 purchase. And it had to move, if it moved up here to the 22.50, you made $1 on that $1.50. So you made whatever that is, 67%. But if you bought the call or the spread and we did it at 55 cents, that meant if it came up here to the 22.50 or higher, that your 55 cents now went to $2.50. Obviously, you can see the returns were much bigger. Plus, to break even, you only had to go to 20.55 to break even versus having to go to 21.50 to break even. AJ, just what I was just saying. It's not that you can afford to buy that call. So if you could afford to pay $1.50 for, or whatever it was for the 20s, what you were doing when you did the spread was you were cutting your break even much lower, again at 20.55, versus if you just bought the calls outright at $1.50, and I don't know what they were on that day, that meant you had to move to 21.50 just to break even. And then if it did go to the 22.50, your $1.50 went up you made $1 on your $1.50 purchase, or about whatever that is, 67% profit. Whereas if your 55 cents went to 2.50, obviously that's a much, much bigger rate of return. So the spread does a couple things for you, or three things for you. One, first of all, you have less money exposed. If all of a sudden this took a big slam, you didn't have a lot of money exposed or less money exposed. Two, the break even is much lower. And three, if it moves to your target, your return is going to be much, much greater. All right. We'll do the option thing again on an option spread night. It's somebody was saying that they didn't understand, it was too complicated on the spreads to try to figure it out, but it's very simple. So that's why we'll do a spread night. It's a good idea to put spread more than 4 weeks. I usually try to keep any spreads approximately no more than 2 to 3 weeks out. 3 weeks would really be stretching it. And the reason for that is, let me go back to this. Look where the stock is now. It closed at 24.46, well above the difference, or well above this level. But what's happening? It's still only trading at $1.90 because the 22.50s have moved up faster because it's at the money, whereas the 20s have moved up slower because anybody buying these calls, or most people that are buying these calls, is essentially doing it to get leverage. So obviously the best leverage is at the money or out of the money. In the money has less leverage, so less people buy those. CB, I don't do diagonals. I'm not trying to figure out what a stock's going to do now and what it might do 3 weeks from now, or the next time frame. If you bought the 20s for $1.05, it was worth, yeah, so that's your disadvantage, is that if you just bought the calls outright, yeah, you could have made big money on it, but your risk was much greater. So not every one of them is going to move like this. So there's another strategy. You buy the spread, and then you buy a few just outright calls. So you do a mixture. Okay, we'll go into spreads on we'll do another spread night. Do you have any concern for loss of value related to the time when you buy only 3 weeks out? No, you're using that time to your advantage. I'm reading. You don't want to be too far out in front of a spread. Let's just say hypothetically on this one, we bought the 40s, and let's see if I can figure out something that, let's say we did a spread, bought the 40s, bought the 45s for $1.10, expecting it to go to $5. Well, when it shoots up like this, and you're 4 weeks out, that spread now can go negative because the 45 obviously is going to move up a lot bigger percentage or faster than the 40s. So you might be sitting, even though this is trading hellaciously positive, you might be sitting for the next 4 weeks where you paid $1.10 for that spread. It might be sitting at 70 cents because of the this one moving up so much faster, and it takes 4 weeks for it to spread back out to the $5 area. Is there a special invitation? Yeah, here's the members sign up. Jake, if the calls don't make sense, or even a call spread doesn't make sense, then I'll look at selling the puts. Now remember, selling the puts is a bullish move. That means it's a kind of a credit spread. You're already putting the money in your pocket, and even if it doesn't move very much, you're still making or putting all that money in your pocket. Yeah, so there'll be times where there was something the other day or yesterday, not, it couldn't have been yesterday, that we looked at where the upside potential was going from 83 to up to 87 before it hit a major resistance level. That may have been more inducive to sell a spread, a put spread, than buy a call spread. Yes. So if you're selling a put spread for $3 and let's just say round it off, let's say $2.50, which means if the price continues to go up, and it doesn't have to go up very much further, if at all, you're going to put that $2.50 in your pocket. Whereas if you try to do buy a call spread, it may have had to have moved up the amount that you paid for that debit spread and another $2.50 to make the same thing as what you did on a put spread. So we're getting, this is kind of hard to talk through without the numbers, but we will do a spread night again and go through all that. Okay, let's finish this, or we'll be here again until the cows come home. You can see the J-hook pattern on CrowdStrike, still moving up. And Logitech has just been one of these not slow, but steady eddies ever since the breakout. There's your 45 degree. PS, another bobble breakout, but you just stay long, figuring this could be wave 1, or even if this is wave 1, wave 2, wave 3 still takes you up further. But look at the, this is why we want to recognize the high profit patterns. Look at our little bobble breakout. When it broke out, where was the next target? The 200. Failed at the 200 with a dark cloud. Look what it did. A morning star signal right on the T-line. Broke through again. What do we got? Another bobble breakout. So just, oh yeah, we do have this. this one. There's your fry pan bottom still working. We recommended work because it broke through this level right here on a slow curve, making the potential of another strong run, at least a good strong run of this magnitude, maybe up into this area. So essentially what we're recognizing, or should be recognizing, with candlestick signals and patterns is what happens. The reason they're patterns is because we know human nature works the same way time after time. That's why we recognize the patterns in the first place. I would think this type of move, bringing you up into this area, or coming back up into the trajectory. But the first analysis is you stay long until you see a sell signal. So the auto parts are starting to show some good strength. And again, there's your kind of your best friend gap up off the 50. Where do you think a potential target could be? Back up to the 200-day moving average. MPlex also setting up for your classic, which is a fry pan bottom, which creates a strong price move, a J-hook pattern. Next move should be the same magnitude as this, making the potential of the 200 also a likely target. And space didn't do a whole lot today. What is that? Go away. However, it did stay above the T-line. We wanted to see it break out through this level. So right now, you can stay long, but you don't want to see it trade lower tomorrow. You want to see this try to break up through. We'll be going through all the top-ranked patterns and signals over the weekend, along with, yes, HS. The schedule will be there. These are long days, but the whole point of it is so that everything that you've seen, bits and pieces, out here on the 1 hour sessions, you start from the beginning with the doji. And the first day we just do the signals and the patterns. That takes up most of the day. Sometimes we have time to do trend analysis of the markets. But everything that we do is we're going through, the biggest factor you're going to realize is everything we look at just makes sense. It's just common sense. I am holding options on space. Yes. So I bought some, I think, yesterday with the idea that if it opened positive, it was breaking out. Obviously a disappointment today, but it hasn't quit. And I think I bought the June, so I'm further on out. If you're staying long, do you have to wait for another buy signal before? AJ, that's another thing that I do to keep my emotions out of my trading. When I buy a unit of position, it's a dollar amount, and I don't add to it. I just because that becomes 1 unit of my portfolio. So if I've got a $250,000 portfolio and I'm putting 10 positions on, each position is $25,000. If I put 40,000 in one position and the rest of them are 20 or 25,000, you can bet your dime to donuts that you're going to spend 90% of your time watching the $40,000 position and paying less attention to the others. When they're all the same, now each one that you look at is not a favorite or something you put your emotional decision-making process in to say, I'm going to buy a lot of this one. You look at each one saying, all right, what's this unit of my portfolio doing? And we'll be walking through that over the weekend. How to keep your emotions out of your trading. Tesla, still a slow uptrend. Let's make this bigger. You can stay long on this one. NVIDIA, broke out nicely through this level. You can stay long on this and notice the doji sitting right here, and then they opened up positive. On 10, where would you put a stop? On 10. I would still use the T-line as long as it stays above the T-line. You can see the kind of the J-hook type pattern setup. So the implication should be that it shouldn't come back down below the T-line. Amazon, another one that up until today just looked lethargic. Now you can start seeing that it's trying to climb back up to this range. It wouldn't be something that I'd get into right now, but it'd be something that at least tells us they're buying, or the bulls are still in this market aggressively. And Apple was a very simple trade. That was another spread that was supposed to come up to, how come I haven't done this correctly? I think it was right here. See the little gap right there? Just came up and filled that gap today. So we had bought the spread, the 310, or the 300-310 spread, and I want to say we paid $3 or $3.30, that if it came up to this level before, or by expiration, it would go to $10. Well, today it was up as high as $8.50. So the math is, if I had $8.50, would I be buying that to hold it for another 4 or 5 days to make another $1.50 or maybe $1, when I could be taking that $8.50 and putting into something that looks more like this and has much more upside with less risk to it. 330 is what we did it? Okay. So I closed it out today at $8.50. Could hold on to it another day or two and make another $1 plus. But there's too many other things that look like this right now, and we'll get to them. But there's much better upside to take that $8.50 and put it into something that has much more upside potential. Netflix still heading up ever since your piercing signal bounced off the 34, getting very close to the breakout area. Lil, put that question in after we do the double line. Halo was acting well, but it looked like after hours it was trading back down here. So here's another thing that we're going to be looking at as far as common sense. What would we expect out of this pattern? Wave 3. Now if it opens down here, what's that telling us? That's a severe drop, that if this is a bullish chart, the sellers can knock it down here. You want to close it out. We saw that same thing in here. Kind of up in the overbought area. It shouldn't come back down through this level. That's not a good sign for a bullish trend. Yeah, I think they missed their earnings, so it's going to be opening down. So you close it out immediately. There was another one. What was the other one that, oh, I can't even remember. Maybe I remember. Maybe I wrote it down. What's happened when they gap it down below the previous day's open? You close it immediately. Now what could you be doing? Thinking about going short on a bearish kicker signal. Yeah, we're going to get to, might as well just jump right to it, because that was the question today, was do you hold a position going into earnings? Well, think of the logic of that if they're buying going into the close on a day that they're going to report earnings, what do you think the people that are most following this company are doing? Is that the right way? What are the people that are following this company mostly doing? They're buying going into the close. So the probabilities that somebody knows what's going on is pretty strong. Now, does that occur in every case? Obviously not. Whoops. Because it looked like they were buying going into the close and they were surprised. So here's the training that you should get based upon candlestick analysis. Usually they're buying. They're probably about 3-4 times out of 5 it's going to go in this direction. But you also want to know what to do immediately if it's not going in that direction. So right now, I know this got up as high as, what, 38? Where's it trading now? Somewhere in this range? So what was that? And now at 34? Okay. So you can see the pattern setting up. So unfortunately, I've tried to buy some spreads on this. Was it the 25, 30? No, I can't even remember which one it was. But was it the 25, 30? Something was selling for 8 cents. That if it popped, it could go to $2. And I didn't get it. The 24, 26, all right. No. Is it gap down from where, John? We don't know where it's going to open yet. So I would still wait, because at least you anticipate that it's come back up into the trend trajectory somewhere up in here. Now, you can, but if it opened here and immediately started trading off, you could take profits and then just buy it back if it came back up where it opened. But the whole point of this illustration was they were buying right into the close. So that told you somebody that knew something, or somebody that was following the stock knew something. And that's basically what we're looking at candlestick charts for too, is to see what the consensus is between the buyers and the sellers. That's right, we gave Grandma a big send-off. So love, look at the bobble breakout. So you got wave 1, wave 2, probably going into wave 3. I don't even know what love does, but it's doing something right. And then I think Trader A pointed this one out earlier. Look at your Morningstar signal, kind of a McMuffin right here. That one probably has a J-hook pattern more upside. Probably. But I'd probably have a sell stop right here if I was long. Because if it opens way up here and has enough strength to come down there, it's coming back through this level. You want to stop out. Love cures, okay. That's the other love. Love Airlines, Southwest. Yeah, you just stay short on this one. Okay, let me get to that. So I was going to show the sectors. They're all in the medical area. There's KP or CAPR, caper. Here's a J-hook pattern. Start watching that one. Codex, everybody's been kind of watching in the chat room. Look what it did today. It broke through this resistance level on a little slow curve. I would suspect this one now has more upside. Is it too short? Jake, that is the question, that if you're asking yourself that means it's already moved. So you look back and said, where should I have shorted this? Maybe here, maybe here, maybe here. But where is it now? It's pretty much down. There's probably better places to short. You're in the oversold area. This would be one that if I was short, I'd stay short. I wouldn't necessarily think this is the best place to short. All right, earnings tomorrow. Thank you, Jay. BSGM, there's another J-hook pattern. Where do you think the next likely target is going to be? I don't know why I have that up there. But wave 1, wave 3 could take you up into this range. So right now, it's all related to medical. Another J-hook pattern on EXEL. MGNX. I think after hours, this one was trading up in this range. There's your breakout. These are the type that when they break out like this, something new obviously is happening. And can you please explain when you would buy puts versus selling calls? Paul, that's a whole long conversation. We would do another options evening session. What's the simple one-liner? Where if you're buying puts, the price still has to move down far enough to cover the cost of that, what you put into buying the puts. So it has to go down that far to cover your cost and then go further. We're selling the calls, and you're selling the calls at a price, and let's say you're putting $1.80 in your pocket. The price of the calls may not even, or the price of the stock may not even have to go down anymore, or it might even be able to come up a little bit where you keep the $1.80 in your pocket. And you would do that on something where you thought the downside potential was limited, maybe heading down and only 3 points away at the 50-day moving average as support, where it might be much more economical to sell the calls than buying the puts. That's right. I think that was WC. Was that WC Fields' method of making money in the market? Buy stocks that go up. If they don't go up, don't buy them. Okay, so everything we were looking at, or that I was looking at today to say which sectors are the best, are all in the medical area. TGTX, after it gapped up, figure it's in a 45 degree. That's why we want to know what type of patterns usually occur after price moves. Now here's Blue Apron. This is not one of the medical stocks, but look at your scoop pattern setting up. So where's your first potential target? Right in here. So if you're buying at 8 and it goes to 11.75, that's still a decent percentage return just to come up to the handle. Then if this is a scoop with the slingshot effect, Oh, it was Will Rogers? Okay. Yeah, selling options is more conservative, and usually you try to keep the time frames much shorter because you're essentially pocketing the time decay that everybody else is adding to the price of those what you're selling because of their optimism of it moving in the direction that they think it's going to move. See, we did this one. We did love. APLT, another therapeutic, one that's just at the breakout level with kind of a double doji sandwich breakout, should be more upside. If this is wave 1, wave 3 has another 10, 15 points to the upside. APTO, another one that has good potential of breaking out through this whole area, giving you also a wave 1, wave 2, wave 3. And observe the obvious. Look what happened right smack dab on the 50. There's your morning star type signal with 2 dojis. Starting back up, stochastic's not anywhere near the overbought. If they break this out, this was 3.5 points. 3.5 points takes you up into the $11, $12 area. TY is down. Yep, and it, I don't know what this level was. Oh, this was the support level. Came back up, hit the support level, and is heading back down. So today it closed below the T-line. Do you wait for the scoop to form? No, you got 2 opportunities here. One, you can be buying it right here on positive trading, hoping that it gets up through the 50 and the 34, with the idea it's going to come up here. Well, even that's a 25% potential upside. Or you can wait for it to break out through here, knowing that you have a slingshot effect. So it's just like most of our patterns, even on a J-hook. You can buy it as you see the J-hook just setting up, or you can buy it as the J-hook pattern's breaking out through the recent high. There's your fry pan bottom. There's your J-hook. Kind of broke out through here. Should be more upside. What did I just do? Let's see, APTO. Oops, we did that one. Nope, well, whose handwriting is this? There's your big fry pan bottom. So if you're buying this, where's your next potential target? At least up here to the 50. So if it goes from 20 to 25, that's I can figure that out, 25% profit. And RVLV. There's your breakout. There's your potential doji sandwich. There's your potential next target. So the breakouts are very informative, especially if they're coming off a candlestick signal or pattern. There's your J-hook pattern after this breakout. And USAC. There's your fry pan bottom breakout. Let's get rid of, I don't know how these get on here. Next target, there's a gap right here and a move up here. Good 25-30% upside. And net. Big move, pull back to the T-line. held up here, that tells me there's probably still more upside. Let's see. All right, Steve, yes, you can use any strategy that works. The advantage, though, of candlestick analysis is you can see which ones are setting up to be able to work. Now, I wouldn't do a spread that far out, so you never can tell what happens. I usually keep my credit spreads 1 week to maybe 8 trading days out, very short term. They don't make a heck of a lot of money, but they make money an amazingly high percentage of the time. Okay, so it's still some of these let's see, not biotech, biotech, medical supplies, pattern breakouts that give you the not only the high probabilities right now, but the high profit trades. Okay. Do we have any general questions on candlesticks? If not, okay, say question. If a stock had a strong update today and you have some profit in it and it gaps way down tomorrow, how you recommend close it? If a stock has a big move today and opens down here, it's not the profit or the loss that you should be taking into consideration. It's what is the chart telling you. If it opens down here, it's telling you shouldn't be in that trade. Take that money. If you've got a loss in it, take the loss and go find something that looks like this where the probabilities are in your favor. If you set in your mind, which I had to do after a long while trading, I took my losses personally, that I did something stupid or I did something wrong or I analyzed something wrong. But the reality is, even if you've got one of the best trading methods in the world, more than likely, you're not going to make money on every single trade. So I've come to the conclusion that about 70% of my trades are profitable. That might mean they're 0.3% profitable. It might mean they're 300% profitable. But it also tells me that 30% of my trades are not going to be profitable. And as soon as I realized that if I had a good trade on and it opened poorly the next day, I closed it out. I didn't hurt my feelings. It just told me, oops, that's part of that 30%, close it out, go find something that looks more like this. Let's see. I would still think as long as it stays above the T line that you're aiming for the 200-day moving average on GWPH. When do you get out of a spread for a loss? Harry, if you're buying a position, it's because the underlying stock is what you're analyzing. When you're buying an option or an option spread, it's because you're analyzing the underlying stock price. If the underlying stock price tells you it's time to close out that position, if you happen to be in options, which is a method for owning that stock, you close out the option. So if you've got a spread on and the stock starts going the other way, you close it out just like you would when you opened it. Does it matter if on the yearly it hits a 50-day moving average resistance? Domo, no. You're not buying the moving averages. You're not seeing what it did a year ago. You're seeing what the investor sentiment is doing right now. So I don't know what you were looking at, but I would be looking at the fact that it just did a bobble breakout and you're in an uptrend as long as you stay above the T line. Doesn't matter what it did over here because the investor sentiment here is different. How do you look wide earnings bars that move back to trend line? How do you look wide earnings bars? I don't use the method that if, let's see, how do you look wide earnings bars that move back to trend line? Use basic trend. You can, well, you see what type of, I don't know what you're asking, Paul, but if I see something, that's not a good chart. I'll find one where they come back, and usually when they break through a resistance level, they come back and use it to see if it's going to act as support. Which ones did that? I think it's coming to me. I'm getting closer. C-Day. C-Day came up through the resistance level, came right back to the resistance level to see if it was going to act as support, the 50. When we could see that it was acting as support on a double doji, what's that tell investor sentiment? Told everybody that's watching this stock, oh, they supported at the 50, let's start buying it. We know right away to start buying it right here, knowing that it's going to be the next uptrend. Dennis, I usually, if I'm trading something intraday, oh, this isn't going to be good. But let's say I was trading intraday on the on soybeans today, thinking that it was going to head up and head for the 50. I use the 10-minute chart. You can see what the 10-minute chart looks like. There's kind of your scoop pattern. There's your slingshot effect. There's your bearish harami. Where is it going to come back to? Test the T line. Might be buying here, but closing out right here, and then thinking of going short again. So now, if it's up here and I'm not quite sure, now I flip to my 5-minute chart. And what's the 5-minute chart telling me? Oh, it's starting to sell off, which means that's probably going to make my 10-minute chart sell off. So what I usually do is, if I was buying right here, let me see if this is going to work. If I was buying right here, I would flip to my 5-minute chart to see if that was working. And then if I'm ready to pull the trigger, I flip right down to my 1-minute chart. And let's say hypothetically, this was the 1-minute chart. So if I can see the 1 minute chart is working, that makes me assume that my 5 minute chart is working, which makes me assume that the 10 minute chart is working. When you draw a price trend line, do you use WIG? Just anything that kind of tells me where we are. And you can usually see what is the line. Sometimes it's using a combination of the body itself along a top, but just something that's giving you clarity of where the breakout is going to occur. Oftentimes the stock goes up after the trade is closed. But you can't worry about that. Yeah, you've got to make your decision based upon the information you have right at the time. So I know there was one I was kicking myself even yesterday. Today it was NVAX that I didn't get my position. I can't remember. So I can't be concerned that if I've made a decision based upon the probabilities and I buy a position or close out a position and I close it out too early, I still have to tell myself I made the decision based upon what the probabilities of the charts were telling me at the time. If I do that, I'm going to be correct a big percentage of the time, and I can't worry about holding on to something when something doesn't look good anymore for fear that if I close it out, it's going to go and start doing what I thought it was going to do originally. Okay, I guess with that, Jim, go ahead and do the double line. Whoops, I didn't scroll. Maybe, nope, I didn't scroll down. No, there were still questions. No wonder it looked like everybody quit. I should have asked, do you hold through earnings? We did that on this one today. Everybody was saying, should we hold going into earnings on this? And this was, they were buying going into the close. Now, if today had looked like this, going into the close, I would have said close out the position. They're not buying it going into the close. But again, this is the accumulative knowledge of everybody buying and selling during a specific time frame. Now, will every single one of them work? No. Some of them have a good, strong chart going into the earnings, and they do this. But for every time you have one of these, you probably have 4 or 5 that go in the right direction. Other than shape, are there any candle specifics? Well, your shape is the signal or the pattern. And it's usually enhanced This one was enhanced because of the trend kicker signal. Notice it opened here, closed here, then gapped up. That enhanced the J-hook pattern. But the J-hook pattern was this up move, pull back, next up move. Yeah, the more pieces that you can draw a line across and they touch, the more it's an obvious resistance or support level. Okay, let's take a look at a few here. BREX, that's a good setup. You can buy this one on positive trading. Notice doji, 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 doji that touched the 34 and bounced back up. More than likely, you're going to see some more upside. AQST, so there's your J-hook pattern. There's your hammer doji. And then you can start seeing how the trajectory kept above the T-line. Cliffs. You just stay long, but obviously you're looking for a breakout through this level right here. So you could buy this one on positive trading. Another one you can get ready to buy as long as it doesn't close below the T-line. You can buy it if it comes up through the 50 on store. XOP, the oil, slow, steady uptrend. Stay with it. AMD. That one's got a J-hook type pattern setup. You can see the bullish engulfing. Now you can see it hooking up, so you're waiting to see. So if you're buying it, you watch to see what happens here. If it gets through this level, now you know you've probably got this type of wave in progress. CME, Chicago Merc, slow uptrend. You're waiting for it to break out through this downtrend, meaning you could probably be heading up to the 200 after that. Teradyne, nothing. That's just a junky chart. I'd be someplace else. And RYTM, there's your J-hook bobble breakout. That's a good looking chart. Now, who took my pen? No, that cat. I'm going to write that one down because the probabilities of that going higher, just based on the bobble breakout, is pretty strong. Coach. Whoops, Cardinal Health. Another scoop type pattern. I'd still be buying this one on positive trading because that would tell you this level is being broken. An ICPT, just stay long on this J-hook type pattern. Cree, having a little bit of trouble getting up through the 50. It traded positive after it opened. It has to get through here. I'd put a safety stop at today's open because if it came back down through there, that was pretty good evidence that they're not going to go up through the 50 or through the 200. L brands, I wouldn't be long or short. It's not moving one way or the other. This one you get ready to buy if it breaks out through this area. Oops, hold on. Somebody's... this is the link for... oops, it's down at the bottom. For the weekend. And for those of you that are still thinking about the weekend, best place to ask is in this chat room with people that have done it before and just get their honest opinion of whether it's worthwhile or not. Red, not anything that I'd be buying. It's not really moving anywhere. If you are long, you can stay long, but it's not what I would call the greatest looking chart. And this one I'd be more apt to buy, especially if it comes back up through yesterday's or Friday's close. Because you can see the fry pan bottom, you can see where it pulled back to. When it broke through, came right smack dab to the 50, did a doji, bounced back up on a Morningstar signal. There's your first target, is right here at the gap, and then your second target. And Wi-Fi. Nothing great there, David. Nike. That one you can buy on a bobble breakout on positive trading tomorrow. Cisco. Same thing. with the anticipation it's heading up toward the 200-day moving average. Work, now that it's broken out, you stay long. Don't let it close back below this level. That would mean you're back into the resistance level. Clovis, another one we're hanging on to. Wave 1, wave 2, going into wave 3. Zoom, oh, I forgot to bring up Zoom. I had it written down. I never got to it. Zoom is more than likely coming back up to the top of the channel. You can see how there's parallel lines. That makes this area your next likely target. And Labu held up pretty strong today. That's what's making all the biotechs good, strong stocks. There's your bobble breakout, which means that's implying there's more upside. TNA, stay long as this stays above the T-line. Space opened lower but traded up. It has to get up through this level to show you a good breakout. And HMI, it's stuck. Unless it comes up strong tomorrow and breaks this level, I'd probably try to find something better. And DXCM, just stay long. A little support there. I would just stay long on this one. JB, that's a lap. Zenga. Whoops. Just now breaking out. Stay long on this one. Costco. Costco wasn't doing too much, but it did do a little morning star signal, but look at the overall trend of this one, not anything spectacular. If you like it, anticipate that it's coming back up to this level. And Beyond Meat, you stay long. Now you have had a shooting star Harami. I would put a sell stop maybe right here, that if it came down through there, it's coming back to test the T-line. Roku, I don't think was doing very much. Not your greatest chart until they can break back up through this level. So if you're long, you stay long, but you want to make sure this doesn't come back down below the T-line. And Warner, you just stay long on this one. And AUPH, just stay long on this one. Oops, I skipped a bunch. American, nothing. I wouldn't be long or short. It's trying to base, but there's no buying in it yet. And TVTY, this one you should have closed out, or if you didn't close it out, it has to open positive to stay in it. If it opens lower, close it. Oh. Clovis, you stay long. Neighbors. Whoops, that looks like it's coming out of a little fry pan bottom. First target is going to be up here, which is a decent, not real big, but at least a 20% upside. Marriott, yes, you can short this one, but don't let it come back up above the T-line. PRMW, can't even tell you what to do on this one. Either we lost part of the charts, something's wrong there. Jamal, I can't tell what to do. space, you bought calls, not spread. Yeah, I bought calls because I anticipated that I was going to hold this. I think I bought the June calls, so it's much longer term. And I was anticipating that if it broke out through that level, then you could probably hold it for a couple weeks where it might come all the way back up into this area. If price continues to go down, do you have an insurance strategy before expiration? Again, I bought, Joseph, I think I bought the June monthlies. Yeah, if this traded back below today's open, I'd close out the position. Oh, Joseph, I don't know where you're seeing 4 white soldiers. This is the July contract. That's a bullish engulfing. Yeah, I don't see 4 white soldiers. Apron we did. That's the one that has the potential of a scoop pattern. But if it gets up here, you got the slingshot effect to the upside. And AMN, another healthcare. Yep, that's probably got the prospects now of at least bouncing back up now that you've had a doji, gap up. So you can be buying this one. Oh, Cheryl, look on your daily comments. You might have a better link. Yeah, that is the member's price. ALGT, nothing exciting yet. Square, stay long. I think we did RVNC. That's a J-hook pattern starting. Roku we did. Not real exciting until it gets back up through the high of a couple days ago. XLE, slow, steady uptrend. You just stay with it. Halliburton. You stay with this one as long as it stays above the T line. Schlumberger, same scenario. Abbott, starting the next wave up. You can be buying this one, or you can wait till it breaks out through this level to be a little bit more aggressive. Six Flags, guess they're opening back up soon. You could get ready to buy this. I'd be more apt to buy it if it comes up through that level. We did XL. Get ready to buy this, especially if it comes up, opens positive through that level. Viri, you just stay long. You can be buying it. Kind of a J-hook pattern. And Disney, you're probably in this slow uptrend. So if you like it, you just watch to see what happens once it gets up into this level. I think we did those, all of those, Greg, didn't we? And PBYI, J-hook pattern moving. When you're trading options, do you use stops to close out if a position goes against you, or just use conditional orders and set a condition on underlying stock to trigger getting out? No, you use, you're not buying or selling the option prices. You're buying the stock based upon using options. So if you analyze a stock coming back through a level that it shouldn't be coming through, that means you don't want to be long. You close out the options. And they do have what they call contingency orders that says stock's trading at 52, but if it comes back down through 50, close out my options. Apron, we're looking for the scoop pattern. Light, nothing. That's kind of a slow, ugly chart. I'd be someplace else. S-Fix, that one I'd be more apt to buy on positive trading on a doji sandwich breakout, filling the gap, which is also heading for the 200. An Apache, when I say Apple, I was looking right at it. You stay long, but make sure it stays above the T-line. SPXL, just stay long as it stays up above the T-line. Okay, I think we got them all. Up Pfizer. If you stopped out, you can get ready to buy it back, or you wait for it to come up through this level, doing your J-hook pattern. All right, as long as these markets stay above not only the T-line, but in this trend channel, that's given the opportunities to get into the strong sectors. And get into things that have good upside potentials. The J-hook patterns, fry pan bottom breakouts. So lots of good trade setups still working. Okay, with that, everybody, have a good evening. We will see you bright and early in the morning. We'll see you then.